Is anybody on?
Online?
Let
Yeah. 1. Sell rules to masters. Investors spend most of their time thinking what to buy, not when to sell. Rule number 1 is always cut your losses short. Bill uses 8% or less. Don't let your winners roll over into losers. Get out before they turn south. Greatest rule of all. Use charts and always buy fundamentally market leaders at the right time off a proper basis. So these are your sell rules to master. And these, in that book, they're spelled out. We go through this over and over. Avoid getting shaken out. About 40% of your buys will pull back near your entry, sometimes on big volume. Sit tight. Sometimes it takes a couple of weeks. Sometimes it will pull back to or just under the 50-day line. This is a potential buy point. Don't get faked out or sell here either. That's happened to me a lot. Use the 8-week hold rule if up 20% or more in 2 to 3 weeks. Hold it for 8 to 10 weeks. True leaders can be up 40% or more. Then look at it and wait for it to trigger sell rules. About 30% of the market will peak after many months of advance in a climax top. The stock will run up 20 to 50% in 1 to 3 weeks. It could also be up in price 8 out of 10 days on increased volume. One of the days towards the end will probably show the stock's largest one-day price move up since the start of the move. Sell into this move. Others will be buying at the top. Also consider selling when the stock's PE ratio increases 130% or more from its original base pattern. Some of the stocks should be sold when the price goes through its upper channel line by 2 to 3%. Draw a straight line on top of the highs connecting 3 or more points. Draw a parallel line at the price lows also. Must cover a number of months. Most leaders will last a year or more if you're getting nervous and you sell in only the 4th, 5th, or 6th week of the advance, you could be selling out of a large winner. Yeah, that's what we got to learn. 8 more sell rules. If earnings deceleration for 2 consecutive quarters, the stock probably should be sold. If your stock breaks out of a base pattern on lower volume and shows poor demand, it should be sold. Look for 40 to 50% increase of volume on the breakout. If it has the volume, then pulls back with volume or fails to follow through for several days to 4 to 5% below your buy point, sell or cut back your position. Sell if the stock is in the 4th stage base with other topping signs. It's too obvious. If the group leader in an industry are breaking down, the rest will follow. After an extended move up over a couple of months and the stock gaps up, it is a sell signal. Consider selling if the stock has its largest one-day down price close after a long run up. Sell if it moves slower than other winners. You have to keep focused on the true leaders. Do a post-analysis of your top winners and losers. You will learn more than all of the other things you can read or learn doing this one thing on a regular basis. Know thyself. How to make millions in mutual funds. This is his next chapter in the book. Best investment medium ever invented for many individuals. A diversified U.S. stock mutual fund is best. Keep it simple. Don't buy the latest fad of funds. Use IB to find the top performers in the last 3 years. A track record. Avoid fast-moving and volatile funds. Once you own a great fund, never ever sell it. Just hold it and let it grow. In downturns, just sit tight. Good fund managers will manage the portfolio and return to big gains after the event and down market passes. Compounding is key. 5,000 becomes 10,000, then 20, then 40, and then it just keeps doubling each cycle of about 5 to 9 years. Don't over-allocate or buy a bunch of different funds. A couple of good funds is all you need. All the messing around and switching funds will cost you returns. Don't worry about the fees you pay. For what you get, many of the best funds charge higher fees and still out-return low-costing funds. If a fund gets really large, don't switch it out unless it starts underperforming its peers. In retirement, use the dividends and take 6 to 7% out of the fund per year if you need to, and the fund will still likely outlive you. Too busy, how to use IBD. So I kind of composed this to where we are today. Homepage of the website, read the top news stories. Use the market trend tab to read the big picture and review the psychological market indicators. Review the new highs, new lows, and time saver table. Find where the big money is flowing by looking in the lists and stock lists. Look over the earnings news under the research tab. Read the weekend edition going through the list of stocks and use the market tables to find the best performing stocks available. Lesson 24, how to make the most of IBD. Use IBD to cut down your time you need to find great stocks. The data in IBD is the same data over 400 large funds used. Don't get overwhelmed with all the information available on the internet. Be consistent and make some rules based on past success and failures from your review of your past trades. And then there's another chapter in there, 10 Habits of Successful People in the book that Bill did that's really good too. If you get a chance, you can take a read of that. So I did post this on Meetup, and it's under Discussions, Message Board, which I've been putting all of them in here, all of our meetings and a recording. So if you want to go back and review some, here's our meeting, and there's the two that when we had people coming to do them. So they're all right here, and I'll post tonight's meeting and this list in PowerPoint you can print from there. So if you go in here and just click on that, meeting 4 of it. So that's pretty well it for that. And now we can go to...
So on the mutual fund, if you guys want, I just did an analysis for my brother. He was given his daughter a starting gift for an IRA, and he asked me to go in and do what fund in Schwab to do. It doesn't matter what period of time you did, 5 years, 10 years, 20 years, 15 years. With the fees being so low in the index fund, if you go with the total market index, that is by far and away, if you want to pick part of your portfolio to go into an index, go with the total market index. If you use Schwab, pick their total market. If you're using Vanguard, the fees are at Schwab are 0.03%. At Fidelity, it's 0.04%. So that statement about fees don't make a difference, it does now that we've gone into the low fees, because most of the managed funds are still at 1%, and a lot of them carry the 12(1)B funds, or B fees. So beyond a shadow of a doubt, it is hard pressed over every period to beat the total market index fund for any active fund.
Yeah.
So, and if she's going to be a school teacher, she can put $1, $2, and over time, like, it will make, I'm going to make her, I told her I was going to make her a millionaire by age 50. She's 23, starting her school teacher position. She's going to have $1 million, and we're going to do it. And every time that the VIX 2 and 3 arrows firing, you're throwing $5, $10, whatever you can afford. If it's just $5, throw $5 in. Save your cup of latte that day and put it on the fund when you have the VIX 2 arrows.
Jim Cramer did that when he was completely broke living in his car. He said he put aside $25 into Magellan.
Well, if you read Kramer's book, he says, well, one, your credit cards should be gone.
Yeah.
Your first $10,000 into the market is the index fund. Well, that first $10,000, put it in the total market. And
Do you recall the ticker on what that was?
You can go on the website and look at it.
SWT, I don't know. All you have to do on.
I'll find it.
Are you a Schwab customer?
I've got Schwab and I've got my kids in a couple of index funds. One's the SPP something, it's the 500, SP 500, and then there's a 1,000 fund also.
Well, the total market, on some time frames, the S&P and the 1,000 outperform, but if you're in those, don't switch, just stay with those. But on the same site, I mean, those five funds
Yeah.
are listed there
I just
altogether.
thought if you spit it out, I'd recognize it if it was one that.
I can never remember Schwab's.
And I put, both my kids into Roth, completely into Roth accounts when I put them in.
So you want to go through,
Yeah, we'll just go through our indexes like we always do, or what do you want to
are we going to go through the psychology or
do? Oh,
you want to
which
do
do
that?
we do first usually?
We've been doing the psychology
All right.
first.
You're going right where I was gonna ask about it.
Huh?
It's okay, I'm gonna take it home. With a doggy bag. Wasn't there? A little bit spicy.
So one of the things that you noticed today, the market's down and now you got volume coming in. And you basically had a bigger volume bar than all the 4 days. So that's a warning shot. Just be careful. Alright, so this is actually on the day after the 17th when we had that big down day. This came to 1.95 and then recovered, and it stopped at 2.2. So if this comes back into a 1, that confirms that that indeed was arrow 1, and you got 2 and 3 to follow, and this is going to probably come down to around 0.5. So that you want to be watching this every night right now. Put call ratio, we actually, in this whole downturn, you never really had a reset buy of 1.15 or higher, but this is getting real close to flirting coming down here.
I hit 0.7, right?
Yeah.
Oh, that's right. Okay.
VIX arrow one day was 0.7.
I can put this in and take it home.
Or actually, there's the VIX arrow day. Right before it, it was there.
I put the VIX, I don't see the arrow.
The item doesn't show much.
So you have the one day blip.
Yeah.
Thank you.
Sorry, that call. So,
All right, so here's the election. That's arrow 1, 2, and 3. Coming out of the election, there's your first arrow, and you basically had a sideways. The market basically didn't do anything for 3 months, and that's usually a long-winded consolidation of some sort. Then you had arrow 2 and 3, and then your buy opportunity was Good Friday. Right before Good Friday closed, if you bought there, you had a one heck of a trailing. That was a very good trailing rally. So if you bought on right before Good Friday at the close, TQQ,
Yeah.
that was a good buy. Because the NASDAQ was 0.9% below the 21 EMA and then immediately went up. But this right here, when you have these gap ups and it goes above 2 moving averages to 40%, guys, you got to pay attention. So on the first arrow, the market always recovers to new highs. Or new highs to where it was before this arrow. So whatever the new high was right here, you go and you basically at least get up to it to set up the double top, or you slightly exceed it. We've met that criteria. So I basically went out of everything on that day right there. But the reason why I went out of the market is more personal. But this is giving you a warning sign that one of the things that when it's so quick like that, you got to be ready for the second and third. So what I would be doing on any of the longs, you pick a moving average. The 4 EMA, the 5 EMA, Swing Trader in the paper uses the 5 EMA, pick one of those moving averages.
5-day EMA?
Read the swing trader column. They use the 5, the 10, and the 21. They get out of positions at least half their position at the 5-day EMA. Pick one of those, any of these stocks that have been doing long to lock in your gains so that you're not giving it back. You want to be doing that. So, there's one more thing on the market trend. I want to go to access the general market. Hit that right there. Whether it's today or yesterday, it doesn't matter. So I'd be looking at this every day so that you see what's going on. So one of the things that the NASDAQ has twice spent 1 or 2 days at A-. So you see the NASDAQ start losing the B+. I think it's at a B+ today. Or at least was Friday. I don't know if it's updated yet. So it's still at a B+. So the one positive is this is still at new highs, what that's telling me is we got a quick correction very similar to what the swoon was for the Brexit or any of these other opportunities. Because this isn't lagging right off the bat. Having a good 5 to 6% pullback is going to be a buying opportunity until you start seeing this no longer making new highs. But it doesn't mean you ignore everything just because that. I am telling you, these numbers, when added up right here, these numbers are in a downtrend. The biggest one that I've learned, when the Bs are below 40%, and right now they can't get back above 40%, that is telling you the market is being sold off. The market is being sold off. They are liquidating because you got little price progress happening up here at the top while you're losing breath. And the biggest reason is the A's can't get back above 800. We're still at 791, but the peak coming off the April 13th low was 913. So not only are we not getting to 800, we can't even get up to 900. So until 913, it's not a robust, broad market. There are leaders, but it's just paying attention. Analog devices is going to set a tone tomorrow. So you got new highs here. You want this getting new highs. If this RS line, go down so we can see it. So you see where the bottom is on April 13th? The RS line on the mutual fund was already breaking out to new highs on the RS line ahead of that. It was printing 3 sets of new highs on the pullback, and it told you on that third red arrow day, it was saying buy. It is not giving you that same signal right now. So just pay attention to what this does over the next couple days.
If you got one. All right.
But I track the total number of stocks in the IBD 6000. It is contracting right now. We were peaked at 657 to 660. We are now at 640 to 647 in that range. When it drops below 630.20, that's probably going to confirm that you got the second and third one coming. So I track the A divided by E's and put a 13-day moving average and a 21-day moving average on that number. 21-day moving average is on top, 13-day moving average is on bottom, price is down here. That's a downtrend. The A's over E's is, the whole distribution is in a downtrend right now based on those moving averages. Breadth is waning. It's doing the same thing that it did in 2014, 2015, very similar. The market does rhyme sometimes. What it's doing is it's setting up the 2014 to 2016 was a wider and looser. Now it's setting up a tighter pattern of a similar pattern in rhyme, which is a good breakout point. The other thing is you're not getting volume on although this has been great, you haven't had volume over here. You've had it on a few names, but when you've gone down and looked at the sell side, you got stock after stock flipping through the 50-day moving average like crazy.
There's the first day, 13 for a while. On the downside, 95 and up. That's what I've been counting, is 95 and up.
Is that refresh for today?
Yeah, it must be. Because
Yeah. Well, I count that too, because
there's your garbage coming in.
so look, and here's your other sign. Biotechs, when the biotechs are in here, this is day 2. They were there Friday. Pay attention to this, because now that's the small caps. That's one of the Russell 2K 3X funds.
Yeah, and I can't do the volume on this. But it squeezes the screen too far. We figured out.
But you got, this is energy. So this is a breakout failure because Ren almost broke out at 42. This was one of the hot stocks in the energy play. That's one of the Permian stocks. And it was at 44 last week. It's now losing the 50-day moving average in gusto. Pay attention to this one right here.
It's one of your favorites there. Umbrella.
Oh yeah, Umbrella's crashing, by the way. Because that was near a breakout and it's losing it very quickly.
Stamps is in here. Senna's in here. Weibo's in here.
And another thing, when you see them on the downside and they're with the new high, that means that's a negative reversal, especially if it's on volume. And I think Stamps is the definition of a late stage breakout. We'll look at that stock. Because the paper's calling that a...
List and roll down. Lam Research, YY. It's better if you could see the percent, I just can't get it to do it on here.
I think if you slide out the one that you put the sliders in. Yeah, that's right. Right there.
Yeah, it's just
Slide
gonna
down.
move it over, we won't be able to see the,
You won't be able to...
Oh, I don't.
but it gives
No,
us,
no,
we can see the percentage then.
move it all the way over.
This is
Well,
volume.
we just need to change, right?
No, we want to see the volume.
Yeah.
There you go.
There you go.
So we got nothing in the top with huge volumes. Down
Well, once
here.
they've broken out, when it's above 20%, that's still good. Because
Yeah.
you still got volume coming in, you still want to pay attention
Normally
to
in these
this.
top 10, you'll have at least one or two in there with the blue line.
So, hang on, this one right here, this is the stock you want to watch in the morning. Because whether that was a pocket pivot buy or a meltdown before earnings, we're going to find out.
So what if it's a meltdown? What's that
Correction on. Because you already got, the semis are going to correct. Because the analog was breaking down. If you look at that chart pattern, when we went into the doldrums of March, analog devices was just cratering. And it sold off from the last earnings report. And it's basically used up all the energy from the last earnings to get back up to trying to break out. The problem with the semis right now is you got a lot of companies that are just extended.
Yeah.
And I do not like what the equipment stocks are doing right now. Because there are some warning signs on the equipment stocks. And several of them I think Sam has on our list. So this is declining. This is the other thing. We just had, what, 6 straight days of new highs? The lows have been increasing every one of those 7 days. So now you're well over 100 stocks between these. And this is just getting more depressed. We never,
You're below
we're making lower lows in the
You're
total
below the
highs.
3 to 1 that I like to see. Times the low by 3. Shouldn't exceed the high. So let's see what's in here.
So we had 444 on Thursday last week, total new highs, whereas the peak back in April, at the end of April, was 614. We never got back up to that. So, and here's your warning. These two are defensive. What was on top?
It's not looking good there. So,
Was there anything up here? So medical's been hanging out at 21. So the good uptrends in November, you had 55, 60 stocks out of the medical, banking, 25 in the semiconductors, and now we can barely, it's just not, it's not healthy. That's why I say if you own stuff, put a protective stop on or sell aggressively tomorrow morning, take some money off the table. You don't have to sell out of all the position. But if you got a 13 or higher % gain, lock some of the profit in.
Good idea.
all right, where do you want to go?
Let's go through the indices. All right. So the Dow Jones, look at that RS line. Which way is that tilted?
It appears as if it's heading down.
It is heading down. It is making lower lows. With all the,
I switched.
yeah, I know, but this is the one that really shows it. The oil, energy, financials, this is killing it. So on the weekly, you basically, that day right there, if it takes out that low, you want to be paying attention to it. Because that's essentially, if we lose the 150-day or the 50-day moving average, we got a date with the 200-day. Because this is essentially, because this is the 30-day moving average, this is actually a test of the 50-day because it went through the 21-day. This is a test of the 50-day, and this is the more severe test of the 50-day. So if you come down below the 50-day again, we're going to get closer to the 200-day. And that's what the RS line is showing you, because today you're still breaking out to new lows. So the composite and the Dow, the two stocks I would be watching is Caterpillar and Exxon, because if they continue to go down, and then Apple's going to take all the indices down. But this can be an island top right here, that gap. If that closes and comes down through the 10-day, we're probably going to close some of this white space. So that's I'm assuming that's the 30-week moving average. So the 150 and the 30-week, getting a touch of those, that is gonna be a buy opportunity. So be patient, lock in your gains, then be patient for that test. And basically every day as you get out of the market, watch the VIX chart. It'll point the way. And this is what I'm not liking, because the mid caps, why you had 5, 6, 7 straight days with the S&P 500 and the NASDAQ making new highs, the RS line is making new lows on several of those days. So you got the same time where I say this can be powerful, it can also be powerful to the downside, because if you lose these 3 moving averages, we're coming here. It's no ifs, ands, and buts, it's going there. Because you've already tested the 30-day right there, so now we're probably going to the 40-day. And that's where it's been getting support all along. So it should be no different this time. Same thing with the small cap. And you see how you're being, well, actually this is a negative, because now the 10-day is, you've already had a negative cross, so that's a bear cross. And you, the 21-day, if the 30 days just now about to cross, I know the 21 EMA's crossed. So that's even more negative. And that RS line is very negative. So again, the biggest leery is this island top on all the ultra big mega cap stocks. And that RS line is not promising, because that's breaking down. The RS, the Russell 2K, mid caps, small caps, look at that. It's basically, that's higher volume than Friday. You got the 10 crossing below, and that's not good. That's a distribution day right there. So that's number 3 or 4 on the Russell. This hasn't updated today, but you want to pay attention to see if it can keep going. But with the Russell, the mid caps and small caps, I think that's going to be an ugly day today when it updates later. Same with that. How you can tell is you basically got the same bars. This is the weekend, Memorial Day, the gap. They haven't updated, so they put the extra bar. That's why the RS line is showing positive, because it's the same thing as the other day. These usually update around 8:30 to 9. Interesting how gold silver is not cooperating with what everybody thinks it's supposed to be doing.
Grains are falling apart too.
I know the fertilizer stocks were falling apart on
Soybeans,
Friday. And metals, you were talking about metals, look at that downtrend. That's not helping, because you basically got the, if that 50 crosses below, that's, we could have a deeper correction. But again, I'm seeing a lot of these island type, if those close, now some of these ETFs are smaller volume, so it's hard to judge on that.
There's a bank living
But the banks, the financials look like crap, guys. So we might,
yeah, and one would think
Almost
with
looks like a head and
interest,
shoulder pattern here.
yeah, it does. One would think with,
that actually is
Interest
a
rates.
head and shoulder
well, let's look
pattern.
at it on a weekly, you'll see it better. So it's already testing the 200.
Yeah, and some of those sectors are selling off pretty good.
Short!
Where'd he go?
So FAZ might be a good long.
So here's home builders, it's not
That's
looking-
FAZ?
It's either FAS or FAZ. So the home builders don't look good. That doesn't look good.
Tried to break out, but
I had DHI all of 3 days and it
Here's
had a short
healthcare.
leash.
yeah, I was watching DHI real hard. Insurance.
What IBD sectors are trending up at this point?
Semiconductors,
Still,
2468 semiconductors. But they're gonna pop soon.
Here's oil and gas. Really up.
Here, hey, look at what's breaking down. Department stores, oil and gas, retail, specialty retail.
Oil exploring.
Thai fried rice. Sorry.
So the pharmaceuticals and biotech, this is not healthy for the market, because this is usually a defensive play, and that's ugly.
Well, that's just an ugly base to start with. Left hand side is too high.
It probably goes up higher than that.
It does, yeah.
So software and services is still in an uptrend, so that's another sector. The software has been doing great. But here's your later.
yeah.
Good one.
I mean, the RS line points the way.
I'm good.
Okay.
So the RS, where you know when this peak right there gets taken out the other way, you want to be out of your semiconductor stocks. So be looking at OS. If you guys are looking at, if you don't have MarketSmith, put this symbol in on IBD charts on the website, and you can get that same chart.
Yeah.
And you want to be watching that, because look at these violent tests of the 30-day moving average, or
That's good.
that's the 10-week average. So we're at least going to the 30-week average on the semiconductors to get it.
I'm going to draw this. Because last time I did that.
So you're saying raise cash to wait for the right opportunity to get back in again?
I would be careful with semiconductors, because
It's already had a huge run.
it depends on what this does. Because if we get something like that, we got one. It's going to be a repeat of 2014, and then we're going to have something violent. So if we come down something like that, quick and dirty, then we probably got one more high, and then we got a bigger correction.
What I've always done, 1, 2, 3, 4. This one's really steep. See how steep this has got? It's all been steep.
When
And
that
now-
gets at the 1 o'clock position, that's steep. It can't be maintained.
Yeah.
Well, look at, we got a gap between the 10. and
So
where
what-
It's at. It's pretty large, larger than anywhere in this whole run.
So Friday,
Except
the
right
first
here,
shot,
it did this.
AMBA was lost on Friday, big time, because it dropped 6 points on Friday alone,
You see that?
and on huge volume. It was up 1,600%. So I would be paying attention to this. When it loses the 10-day moving average, we're in a correction. And the composite will be... The other thing that you want to pay attention to on the composite chart is notice where the 21-day moving average is. The 21-day moving average is now above the 6,100 level, which has been resistance for a long time. When that 21 moving average gets up there above the resistance level and it loses that level, that's typically the signal of the correction coming.
I'm just looking at something else.
So did we look at the composite?
That's all that was in there.
Yeah, I'm not.
Can we look at the composite? I wanted to point that out. Whether you got the
This one?
30-day or, yeah. So go to the daily. So whether you're using the 30-day, click on here. So the 30 days at 60.77. The 21 EMA is at, it crossed on Friday at 61.05. So it should be up around 61.12 today. So when the 6112 level is broken, that's probably gonna be the shot that you got something bigger than what this was. And I don't care if there's just 2 days of distribution. We've been selling off for the last 5 days. If you've been paying attention to stocks on the move and the time saver downside, it's been the cliff diving show where stocks are jumping off the ledge going through the 50-day moving average on a daily basis. But they're not the leading stocks from the semiconductors or that. The first stock to do that was AMBA. It came down, I think it stopped at the 50 days, so whether it broke through, put up AMBA real quick. So this clearly, this is the leader, the semiconductor. So when you want to be in stocks that are part of that. The QQQs and the stocks were the 2 indexes to be a part of. If you just played those 2 TQQ and X SOX L, it would have been great. But you see this volume? Guys, that's huge.
Yeah, it's massive.
It's not even earnings yet.
Yeah,
So-
why'd that drop so much? It wasn't even earnings.
It got downgraded.
Oh, is that what it was?
So you remember our 4 questions that we asked? Bigger volume, gap downs. So you got 2 big questions answered right there. If it breaks the 50-day, that's the 3rd, or if we get a uptrend incorrect, under pressure.
Tomorrow will be interesting, because it tested the 30 day. And it closed, let's see how the volume is at the close of the day. So yeah, you got volume coming in here, and you didn't get back up in here. Really ugly.
What I don't understand is why didn't that have the run like the rest of the semis? You know,
Because
it
it's
was
going for the
on
GoPro.
base.
It's going into the segment that's not being supported.
That's GoPro.
GoPro, yeah.
That's the drone market. The drone was saturated last year.
Yeah.
So, I mean, hang on before you do anything. That tells the story right there. There's the drone peak. And you wouldn't have been investing in this anyway.
No.
It's not the leader. I mean, it's starting to recover. They are starting to diversify, but they got some more work to do.
Nvidia's in that group.
The key is, you see these there, anytime when you're looking for a stock on breakdown, if it loses these key tight circles right here, this is the one benefit of MarketSmith software. Because when you lose those, you walk away from the stock forever. But if it gets support right there and then comes back up, that might be a way, this might be a nice little double bottom with handle where you go invest in. But the weekly chart, that's one of the reasons why I love MarketSmith, is because of those tight circles for the 3-week and the 4-week
There's
tight.
a monthly. And like you said, once it loses this support, it's in real trouble. But that's right now a pretty solid support.
But for that to be the
Look
first
what's-
one to break,
Look what's going on.
that's not
here.
good. Yeah,
Volume is going down.
that's not good.
Does that show up on the weekly, that audience?
Yeah.
It does. See, now that you look at the monthly though, you see it a lot better than the weekly. It wasn't as obvious too.
But
Skyscraper.
these
Yeah.
are your keys. The skyscrapers are pink.
Yeah,
Very hard to chart.
107% closing at 2%. 114 at 6%. That's just ugly.
So look at all these 5 straight up weeks. I mean, you had a good tradable rally,
Here's
but
the
there's
best
no
day.
volume.
There's the best week. 12%. Closing at 83.
Yeah, there's a lot of stocks moving up in low volume.
Yeah.
And there's a lot of stocks that are selling, all the volume on these accumulate, it's the sell side.
Alright, so now where are we going?
You know the FANG one?
So let's go through the sectors real quick.
Sectors.
The broad stroke sectors. Start with
This is the
technology.
XLs.
Yeah.
What I've been doing with this is I look at this at the end of the day and see where everything's fallen. So today, utilities, earlier in the day, utilities were the top one up, the only one that was up. And consumer discretionary was right behind it. At the end of the day.
TLT is saying they're not gonna raise rates in June.
Yeah. So I've got silver in here, TLT, and the XLs, which you can put these on anything. Believe it or not, the XLs control 40% of the S&P 500.
Yeah.
They are
Which one,
40% of
Well,
the XL.
I just wanted to go through to show what's in a downtrend.
So
Just
you wanna go through these or what?
Yeah, just start with technology and. So clearly technology's been the leader. There's your RS line. You basically want stuff that's in a 45-degree to 30-degree angle for the RS line as you're following the path. So this is the classic Stan Weinstein Stage 2 advance. Okay? So utilities are given a kind of hiding. They've had a nice,
They just
they're
did a
kind of
breakout.
breaking out of a advance. So this has been a stage 1, so it might be starting at stage 2.
So look at it on the weekly and stuff.
And so there's your stage 4. That's actually your stage 1. And then you've had a tightness area right there. So you're actually breaking out. So utilities, if you want to hide some money in utilities,
And
that
this
might be good.
pays 3%.
What?
It pays 3%. 3
Yeah.
in yield.
So better than treasuries.
But will that hold up through a downturn, or will it
I
come
don't
down
know.
first? Or will it go up?
Cash is a
It
position.
can
usually
be
does well in the
substitutes
summer.
for,
See, I'm
Utilities
already
do well
looking
this
at doing
Yeah, cash is a
this,
position.
because it broke out pretty good
Yeah.
today,
It'd
the
be a good
last
summer.
3 days. Well, it's already in our buy zone, see that? We're already
Yeah.
losing it, it already did, it didn't break with volume here, but here the volume come in,
What percent is that?
It's very seasonal.
this one, if I can get it there.
So when the utilities and real estates are in the top 5 groups of the new
38%,
highs,
so there's the
that's
40%.
that's your indication. You go
These are
look at
such slow
these.
movers, I've never.
to
been
put
that
some money
usually,
there
But
if
my
you want.
checklist,
And that started happening last week.
I think once we.
So one of the things that I do on my